Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius. Today is the 5th of October, 2023. So, yeah, welcome, everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. And Karan Kerai, hi, I can see you there. Hi. Yes, hi. Very nice of you to join in. So yeah, before we go further, as always, quick read through our risk disclaimer. So yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll be back in a bit. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. Yep, if you have any questions, you can always reach out to us. So, as always, guys, let's jump into the charts. The first one I want to pick up here is Nikkei 225. And by the way, Karan Kerai, look, this is the list that I'm going to go through. This is normally, you can see it here. So, and in general, you can see that in the description, the instruments that I'm going to be picking up in this webinar. But yeah, look, if you gold is here. I can see I can see your question there. Gold is here, so I'll get to that in a bit. But first, I need to go through indices, then commodities, cryptos, and then currencies. Casey Lewis, hi, good morning to you too. Oh, I think I've in the description I've left out the natural gas. Let me just nat gas. Yep, there we go. So now, perfect. So yeah, let's jump into Nikkei 225 as always first. So yeah, we drifted lower. I talked about this yesterday. I said to you that, look, my next target is the 30,400, which we managed to reach. Perfect. Then I said to you that if we do clear that and stay below that hurdle, then yes, my next target is the 50% retracement on the Fibonacci here, which is drawn from the low of the 2nd of January of this year to the high, to the highest point of this year. So basically from the lowest point of this year to the highest point of this year. And you can see that we did kind of go closer to that 50% retracement, but yeah, we didn't have enough power, or should I say the bears didn't have enough power to go there. And then we reversed back up. However, to support the bearish case, we are still below, or kind of, let's say not below, we're just a little bit above the 200-day EMA. Okay, in that case, there is hope that we could see a bit of a larger correction here to the upside. So initially I was thinking that maybe if we're still below the 200-day EMA, then yes, the downside scenario is not off the table. So long story short, for now, I would say if you're looking for some lower levels, I think that the easier option is maybe to keep an eye on that 38.2% retracement here on the Fibonacci, which is roughly around the 30,830 zone. If we clearly drop below that, then yes, potentially this may attract the bears back into the game. But at the moment, we're seeing some positivity. Yes, we're seeing some yields easing off, and this is where I think that the Asian markets are reacting positively. And yesterday we saw some positivity in the US as well. So, all this is, connected nicely. So I think that the markets are picking up nicely on this little decline that we had here yesterday in the US 10-year note. So yes, we're seeing a drop in the yield. So okay, look, let's get back to Nikkei. I'll jump into the U.S. indices in a bit just to talk about that because we do have some data coming out from the U.S. Today, and we had some yesterday, but I'll get to that in a bit too. China 50. So after we've cleared this upside line, I talked about this. We moved towards my targets. My last target was the 12,200, and then I said if we do drop and stay below that, then yes, my next target is the 11,980 zone, or in general, that psychological 12,000 mark. So, yep, at the moment, it seems like we are on the right track. However, let's not rush into things because again, China is closed this week, and these are the futures that are moving here. So, and these are mainly kind of moving after all the other major indices this week. So yes, it's in a way this week China 50 index is kind of just following what's happening on the global arena. ASX 200. So there we go. We are trying to climb back above this territory, back above the 6,950 zone. So if we somehow stay above this area, then yes, a larger correction to the upside could be possible. However, if you remember yesterday, I talked about this and I said to you that if we do break this downside line, then yes, this is from where I'm going to get a little bit more excited with the upside, and then maybe I'll consider some moves towards that psychological 7,000 mark or even the 7,040 zone, which I've looked at previously in my previous videos. And that could be a nice good target again, but let's not rush into things because again, look, we did have a strong decline. We did reverse sharply back up, so we're now kind of climbing back over the 6,851 zone right here. But if we somehow drop back down and we start falling, let me just grab a line. I think let me recycle one of these lines. Always recycle, guys. Yep, there's a hidden message for you there. So yes, this is the hurdle that I'm going to be keeping a close eye on, the 6,833. If we do drop below it, then yes, I will go to the downside again on this one and potentially aiming for that 6,850 territory, somewhere around here, which as you can see has been a nice good area of support back here in December and back in March of this year. December of last year, March of this year, of course. So let's jump into the Dow. I think I have more to say here on the US indices. Look, yesterday we had a beautiful recovery, and yesterday I talked about this little hurdle here, and nope, not this one, this one. Let me just grab this line. There we go. There we go. So I said to you that keep your eyes on that 33,067 mark, or in general the psychological 33,000 mark. And if we do drop below it, then yes, I will go to the downside. And from here, we got that nice reversal back up, so that's fine as well. However, as I've stated clearly, that my upside scenario is from this downside line, so I need to see a break of it first in order to go higher. At this point, I am going to be just observing the price action. And as I said, yesterday we saw a bit of a reversal in the yield here. And look, I think that yesterday also played out, what played out in favor of the market actually are bad economic numbers. And I'll explain that basically because yesterday we had the ADP coming out from the US. So some people like to gauge kind of NFPs, with ADPs. So in a way, look at ADPs thinking like, oh, if it's down, then maybe, NFP is going to be down as well. Look, it can be, but I keep on warning people that it's never the exact correlation, never a direct correlation. Sometimes well, actually, I think it's like 50-50 even. But need to look into this. I don't have the stats, but somehow from my own personal experience, I'm kind of seeing this kind of acting actually 50-50. Sometimes even I think that it's not even correlated at all. So, and to be honest, that makes sense because it's a totally different metric. They measure it this way, NFP is measuring that way. So, look, the ADP non-farm employment change came out much lower. So the forecast was at 153. The adjusted previous number, well, the previous number got adjusted to 180K, so the forecast was already on the lower side, and the actual number came out at 89K. So basically meaning that we have slid quite significantly. Now, of course, everybody's all eyes are on tomorrow's number, NFP number. You know, will that be the case or not? And we'll see. Also, yesterday we had the global services PMI figure coming out, and that came out at 50.1. So basically, we're just fractionally above 50, fractionally in expansionary territory. That's not good. Let's put it this way. And in general, why I'm saying that the market took it as a positive, because if the numbers are like that, and if everybody's also expecting to see NFP on the lower side, maybe actually the market is saying, hey, that's great, because the Fed then is not going to go and raise rates again, because it cannot justify that. So, you know, and in general, as we know, at the moment, the Fed kind of, you know, has been radically increasing rates. And the next meeting is in November, the 1st of November. And yes, I mean, I said it before already, I don't think that they're going to go for a hike. Maybe in December. We'll see. If the market recovers, if we start going into that kind of holiday season rally, then maybe, yes, in December, we will see a nice, beautiful interest rate hike, the last one for this year. So, but again, I'm not gonna say anything yet. We're just gonna keep an eye on it first, and then we'll go from there. But look, what I wanted to say here as well, that in general, if the numbers continue to come out bad, I think that, like I said, the market is going to take that as a positive, because, like I said, there's no need for the Fed to raise rates in order to kind of stabilize inflation, because maybe inflation will, you know, is not going to be picking up again. However, look, in support of the Fed and its rate hike, I think that they might say that, but you know what? Look, the inflation is not close, is not near our target yet, because United States inflation right now is sitting at 3.7, and the inflation target, the Fed and most of the major central banks, they all have around 2%, so 2% target. Okay, look, for now, I would say, and this is one of the only reasons why they can, you know, justify or try to justify a rate hike. So, so in that case, we might see like a decline later on if the Fed comes out with a rate hike. But I think before that, there is a good chance we could see a nice recovery here back to the upside, maybe even going back to this 200-day EMA here on the Dow. But as I said, I need to see a clearance of this downside line first, and then I'll get comfortable with some higher levels. S&P 500. S&P 500, also beautiful recovery, and I think that some of these levels did not work. Look, I talked about this 4,262 yesterday, but I have to admit it didn't really work out well. I think I should have, would have drawn this instead. Let me just grab a horizontal ray. This one right here. I don't like this. I don't like that. I like this, and I prefer this way. So, as you can see, we found good support near the 4,240 zone. So probably this was a much better level to keep an eye on. So, or even better, actually 42 zone. Yeah. So look, I think that this is what I'm going to do. I'm going to mark this as the next barrier for the downside. If we get that breakout here below that 42 zone, then yes, I'll go to the downside. In the meantime, I will, given that we have pushed back above the 4,277 territory, then yes, I will go to the upside. And so far, as long as we stay above this territory, then yes, I will go a little bit higher. This is what I've said to you yesterday in my morning video. So far, so good. NASDAQ 100, beautiful recovery on the NASDAQ. I mean, look at this. I mean, yesterday was the biggest loser. Today is the biggest winner. I mean, it's all over the place, guys. And yeah, we're now seeing a reversal, a beautiful reversal from this 14,600 zone. I talked about this level and said to wait for that drop and wait for that body of the daily candle staying below it. So we did drop below it, but then we failed to stay below it, and then we reversed sharply. But as you can see, this barrier here, my barrier for the upside, is providing good resistance. So this 14,855. If you do push above this area, then yes, I will get a little bit more comfortable with higher levels. The German index, DAX. So yesterday we saw a nice, beautiful recovery here. I mean, initially it was sliding, but then it found support near the 15,066 territory. By the way, this is the futures that I'm looking at, because maybe on the cash index, on the cash index, we did fall below the 15,000 mark. So, but on the futures, we just came very close to that, and we then reversed to the upside. Look, I said to you before, and I'll say it again, I will start picking up on some higher levels if we do climb and stay above this 15,265 territory on the futures, and then yes, we will go from there. I'll aim for this 200-day EMA, and then we'll take it from there. The FTSE 100. Oh, and by the way, in terms of economic data from Europe today, well, there is none. So, I mean, there is not much happening in general. So, we did get the German trade German trade balance. We got that one. That came out much better than expected. And that's it. I mean, UK will produce the construction PMIs today, and I think Eurozone as well. I can see there construction PMI, but nothing major basically. Yeah, I think everybody's going to be watching the initial jobless claims from the US today, so this is something to keep in mind. Also, we do have some Canadian numbers coming out, the IV PMIs, for example. But I'll get to Canadian dollar in a bit. But yes, so today it might be a little bit on the calm side, you know. But maybe it's, like I said, in preparation of the NFP to the NFP kind of. But coming back to the FTSE here, look, I mean, so far, mission accomplished. I talked about this yesterday, if you remember, in my morning video. I said to you that if we do fall and stay below the 7,520 territory, my next target is the 7,433. Fantastic. Tick, 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 tick. Great. Look, if you want to go further south, I think you still have a chance. And the reason why I'm saying this is that maybe if the US dollar does correct back down, this would push GBPUSD higher. And as we know, we do have the kind of the inverse relationship with FTSE and the pound most of the time. So when one of them is getting stronger, the other one is getting weaker. So yes, and the moment, like I said, the FTSE might still be under a little bit of pressure. Maybe it could still drift a little bit lower. So I do have this little target here, the 7,400 zone. And yeah, and then I will take it from there. So at this point, long story short, if we are looking at some lower levels, then there is still a chance to go and reach that. My next target would be the 7,400 zone. If we are looking for some higher levels, I think it's best to push above this hurdle here, the 7,520. If we get a nice clearance of that one, then yes, great, more buyers could join in. And then we could maybe aim for the EMAs here again, or maybe a little bit higher here. But again, let's go slowly. Let's not rush into things. Daredevil Dave, good morning to you too. I can see you there in the chat room. So yep, happy to see you here. I hope you're also having a wonderful start of Thursday. But let's have a look at the US dollar here, and there we go. We did push higher. Look, I mean, I talked about this yesterday. I said to you that in a way, the fact that we've climbed above the 106.54, yes, that opened the door towards my 107.15 territory. We came very close to testing that, and we then failed to go further north, and instead we reversed back down. But Look, I didn't say that I'm going to get very bearish if we do fall below this 106.54. In a way, if we, let's put it this way, from the very, very short-term perspective, if we continue to trade today here below this territory, I'm considering a larger correction to the downside towards this upside line. But for me to get comfortable with lower levels, a break of this upside line is required. And then, yes, I will go a little bit more to the downside. So at this point, I'm observing the price action. If we somehow climb back and stay above the 106.54, maybe the bulls are not willing to give up. However, I think that for me to get comfortable with that idea, I would still need to see at least a push above the 107.05 territory. That's the current highest point of October. If we get that push, then yes, a forthcoming higher high will be confirmed. Gold. So gold. Okay. Again, yesterday we did drop below that 1824. We kind of initially we were staying below it, but then we pushed back above it and we stayed above it. So the downside scenario I think is slightly off the table right now. I think maybe a bit of a larger correction here to the upside could be possible. So let me just adjust this no longer needed. I think this violated it. I think it's better to mark the current lowest point of October near the 1815 territory, and that's going to be our barrier for the downside. If we clear it, yes, I'll go lower. Because I cannot squeeze my arrow here, actually I'm going to aim for the 1804 first, or 1805, 1804, something like that. And then we'll take it from there. That's, by the way, the current lowest point of this year. So, looking at the picture here, so in other words, there is a good chance for this commodity to rebound a little bit higher, retrace a little bit higher, I mean, but let's see if the Fibonacci can help us out here. So basically the 23.6 is somewhere near, near the low of this 29th of September, and that's roughly around the 1845 territory. Okay, 46 actually, to be more precise. So good potential target. As you can see here, historically it did provide good support and resistance. So you know what, it actually makes sense to aim for that one. So long story short, as long as we remain somewhere above this 1815 territory, I will continue aiming to the upside in the near term only, because for now I'm just going to aim for this, like I said, 1846 territory. Let me just put this on the chart. I think it's better. There we go, 1846. And then we'll take it from there. Around here we have this 23.6. Maybe it'll provide some resistance, and maybe then we'll reverse and push back down again. But let's for now, let's because like I said, I'm sticking to some higher levels if we if we continue to trade above that 1815 zone. Silver. So sorry, I had to have a little sip of tea. My voice, I think, is going down a little bit, but silver is a little bit more bearish than bullish, to be honest, because we are still holding below this highlighted zone here. I talked about this. So far, as you can see, it's providing good resistance. So in a way, another decline here could be possible. But if we are expecting, let's say, gold to push a little bit higher, maybe silver could do the same thing, and maybe it could also make its way higher here and push above the 21.47 territory. Well, let's wait and see. If it does that, then yes, I'll consider a larger correction to the upside here. Simple as that. Copper. This one's looking a little bit more bearish. However, we kind of already reached my target in a way, because my target was here, the 3.5450 level, which is the lowest point of this year, the current lowest point of this year, because as you can see, we came very close to testing it. I would say this is a good result. Previously, I talked about copper a while ago. I mean, I picked up on this one, and there we go. We reached a good result here. Fantastic. Now my question is, can we go further south? Well, to be honest, I think this is what I'm going to do right now. I think I'm going to just stick to this idea. I'm going to get rid of this arrow. I'm going to stick to this idea, and if we do fall below the 3.5450 zone, then yes, I will go lower. For the upside in the near term, I would like to see a push maybe back above the 3.6273 zone, somewhere around here, roughly. and then I will consider a larger correction here to the upside towards my 50-day EMA, because that one recently did a good job and provided good resistance. Oil, boom, there we go, mission accomplished. I'm very happy. So what I was talking about here previously, so I said to you that after we saw this nice reversal to the downside, I said to you that, look, 90.36, this is what I'm going to be keeping an eye on, and if we do clear it, then yes, I'll go a little bit lower, initially aiming for the 88 zone. Beautiful test here. We rebounded, tested my 90.36 from the other side. It provided fantastic resistance, and then we sold off again, and this is where you can probably, I said that yesterday, I've mentioned this, that if we do fall below the 88 zone, my next target is the 38.2 here percent retracement on the Fibonacci, or this upside line. I mean, amazing. Everything worked out perfectly. By the way, this 38.2%, I already said that, but I'll say it again. This is the Fibonacci, which is drawn this way, actually. So from the high of the 14th of June to the low of the 3rd of May. So basically, we can say that actually maybe, it initially was working nice, but now I think it's no longer working. So this is like in the opposite way, basically. I think that maybe some of you might say, but hey, what about if we draw it this way? Let me just put this on the chart. So where's that? There, low here. So yep, there we go. So what if we draw it this way? And then we have the 23.6 near my 88 zone, which is fine as well, to be honest. Don't get me wrong, all good. So now, given that we've broken the upside line drawn from the low of the 28th of June, now we can say that maybe actually we'll be aiming for that 38.2 on this, the correct wave drawn Fibonacci. And actually, I'm wondering if this is not going to be the case here somewhere. Ooh, yeah, this is much better. Look at this, guys. I mean, you live and learn. So this, I think, will be a much better Fibonacci than that one that I've drawn previously. So actually, yes, let's stick to that one. Then the 23.6 is perfectly sitting near my breakout level. Perfect. Then we reached the 38.2 already, so that's perfect as well. Now my question is, can we slide further south? Well, I would say that, yes, in a way, there is a good chance for doing that. So if we do fall below the 84 territory, 84.20, something like that, then yes, I will go a little bit lower here. I will go to the downside. I will go here. So long story short, if we do fall below the this 38.2% retracement on the Fibonacci, which is roughly around the 84.20 zone, then yes, I will get comfortable with some lower levels, potentially aiming for that 50% retracement on the Fibonacci near the psychological 80. Actually, not, yeah, somewhere like around the 81 level, not a psychological one, but like near the 81 zone. Natural gas, one of my favorite ones. Look at this. We're again flirting with the upper side of the range. So it seems like it really wants to get out of there. Okay, let's wait and see, of course. But at this point, yeah, I am looking at some higher levels. But I will say it again. We did come closer several times already to this territory. Can we eventually get that breakout? Well, let's like I said, let's wait and see, because at this point, it is looking quite positive. But again, I cannot stress this enough. How many times I said that, wait for that confirmation break. The fact that we are climbing above the 200-day EMA, that's like an additional support for this idea. Look, if you don't have natural gas, you can always, trade something else, but something related to natural gas. Maybe some ETFs or something like that, But look, for now, I mean, natural gas could be the most obvious one. Yeah, good potential idea. Can we get that breakout? Well, we did try, but we did kind of fail to stay above this. So in a way, don't get, this is where your patience will have to, work very hard for you. Or you will have to actually work for the patients very hard. So let's wait and see. For the downside on this one, now previously I talked about the 2.45 territory right here somewhere, but actually I think that we can start looking at some lower levels if we do drop below this little hurdle right here, or I should say the EMAs, the 50 and the 100-day EMA. Bitcoin Cash. The picture here, what I'm seeing is that a nice, beautiful retracement is still in play. However, the 225 territory is providing fantastic support. Now, previously, I looked at it as a good area of resistance. Then it broke, and then we traveled a little bit higher. Yesterday, I picked up on this one. I said that I should have drawn this 255 level. Oh well, you know, we reached my area in between that, so that's kind of great as well. So now my question is, can we see a rebound? If we can, great, I'll go to the upside again. If we don't, if we break below this 225 territory, then maybe we could see a bit of a retracement here towards this upside support line drawn from the low of the 10th of June, but I'll get more comfortable with the downside if we do fall below this upside line. Ripple. Ripple is interesting here, and Ripple is still kind of in this territory where I'm not touching it because I really don't like it when it's kind of getting squeezed like that. I mean, okay, on one hand, I like it because then kind of it tells me that a breakout could follow. Although we think that maybe this is an ascending triangle pattern, to be honest, the prevailing trend was to the downside. And if we just class it as a triangle, just a regular triangle, then actually the idea here is the technical scenarios that the breakout to the downside is a little bit more likely. So yeah, because the prevailing trend was to the downside before entering a formation. But if we do clear the upper side here, you know, this the 0.55 territory, if we clear that one somewhere, then yeah, great. I'll go a little bit more to the upside. Let's jump into a few pairs, a few forex pairs, and yes. AUDUSD, look at this. After we cleared the lower side of the range, we then retested it, revisited it, and we came very close to testing my 0.6272 territory right here. Okay, we didn't. Okay, I think that will take that as a result. I mean, we did like something like 80% of the move here, and I think that was great. So, look, guys, I keep on saying it's never. I mean, I said it yesterday already as well that it's never the level. It's always the area near that level. So let's say if you've entered, you know, your position here, and then you're drifting nicely to the downside. You're thinking, hey, great, you know, it will kind of already go to this area right here, and then you do like 80% of the move, and then it stops. You know, it stops. It starts thinking what to do, and then you know what? Actually, I think it's better to take the profits and just enjoy those, enjoy life. And this was already a good move. So, but yeah, I would say at this point, looking at this hurdle here, the 0.6365, if we continue to trade below it, then yes, another decline here could be possible. For the upside, I would need to see, well, this is where the interesting bit comes in. I would like to see a push back above the 0.6365 territory in order to go higher. But yeah, look, I mean, at the moment, I think that this is the area we can keep an eye on. If we do climb and stay above it, then great. I'll aim for the 50-day EMA. Simple as that. AUDJPY. So let's have a quick look. I've talked about this one. I said to you, look, I mean, we did get a nice move. And we did now get a retracement, a nice retracement back to the 50-day EMA, and now we're kind of getting a hold up near this 94.54 territory. So if this continues, if we continue to see this nice little hold up here below this hurdle, below this highlighted zone, the lower one, then another decline here could be possible, and this is what I'm considering a move back to the 200-day EMA. So maybe today we'll see this pair jumping around somewhere here, but maybe going into tomorrow when the NFPs come out, then maybe, yes, a nice drift lower could be possible. But again, let's not rush into things. Let's keep an eye on this. But again, this is where the problem is, because this pair is kind of a risk-on and risk-off environment indicator. If the stock market rallies, then maybe we could see this pair rallying as well and pushing back above this upside line, and this is where we could start aiming for the upside again. AUDCAD. Wow, I haven't looked at this one for quite a while. As you can see, about because of the absence of my lines here. But after we've got that nice decline here, as you can see, we found a good support near the 0.8565 territory, and we rebounded. We pushed higher, we climbed to the upside, then we retraced, and then we didn't create a lower low. We created a higher low after kind of rebounding from this 0.8625. And guess what, guys? I'm kind of leaning a little bit more towards the upside. So if we do push above this 0.8745 territory right here, wow, guess what? I'm going to aim for my 100-day EMA and then the 200-day EMA. I'm not going to put any levels yet here, but I'm just going to stick to my EMAs for now, and I'm gonna take it from there. So at the moment, I'm kind of leaning nicely towards the upside. Let's see if we can if we can get that move. If we can, great. I will go higher. But like I said, it has been a while, and to be honest, by the way, maybe this arrow should be drawn a little bit lower. The reason why I'm saying this is maybe the 200-day EMA will actually come down a little bit here somewhere, and maybe, just maybe, it might coincide with this downside line. Now, it's a little bit tricky, don't get me wrong, but again, let's see. But ideally, I would like to see a push toward the 200-day EMA. But of course, the market doesn't always give me what I want. So yeah, so that's why I think that it is best right now to just kind of keep an eye on this barrier, this 0.8745. And if we do clear it, yes, we can go higher initially towards the 100-day EMA and then towards this downside line. And then we will take it from there. So just bear with me one moment, guys. Just something that I wanted to check. Just a sec. Where's that? Just bear with me. Okay, sorry about that. I mean, I was just reading a comment from somebody. It's the bald guy. Okay, yes. Well, yeah, I am quite proud. Quite proud. So yeah, people know me as the bald guy. Great, fantastic. I make a mark on myself, right. Okay, guys. So, ADCAD. So this is the situation. Now, in terms of the downside on this one, look, I mean, pretty straightforward, I think. If we do fall below the 0.8625 territory, then yes, I will get a little bit more excited with the downside, and I'll consider a move towards the 0.8565 again, and maybe even lower. NZDCHF. So, NZDCHF, look, I've talked about this one, and I said to you that if we do fall back below this downside line, I will consider a move lower. But if we, if we rebound from this upside, from this downside line, sorry, then yes, we could still consider the move higher. In general, what I've mentioned to you before, that whenever we break a trend line, we tend to kind of visit it from the other side, and there we go. We did kind of rebound. So my question is, can we get a larger rebound? Can we get a move back to this 200-day EMA? And to be honest, I'm going to stick to that idea. And as long as we remain above this downside line, then yes, I will consider a move towards that 200-day EMA. After that, we can start shifting our attention maybe towards maybe higher levels, especially if we climb somewhere above these two hurdles right here, this whole resistance zone between 0.5493 and 0.5511, and then yeah, we could take it from there. Then we will target some higher levels here. USDJPY, so one of my favorite ones lately, and there we go. So after we saw this kind of possible intervention from the Japanese Bank of Japan, then yes, we did decline, but now we are still flirting with that 148.85. Look, we did drop again below it. So I'll say it this way: as long as we remain below the 148.85, then yes, I will go lower. I will aim for the 147.32, and then we'll take it from there. So if you're looking for some higher levels on this one, then yes, a push above the 150.16 territory would be required. That's my simplistic approach here on USDJPY. At the moment, yes, the downside scenario is a little bit more likely. Just because we're still remaining below the 148.85 territory. If we somehow push back above it, maybe we'll actually start shifting our attention to slightly higher levels. USDCAD. So yes, again, as I already just mentioned, that whenever we break a trend line, we tend to revisit it from the other side. And this is actually what I'm considering as well, because if this little fella here does go for a decline, does go for a nice retracement lower, then yes, we could expect this fella also correcting back a little bit to the downside. If that's the case, then yes, all eyes are on the downside line, which we broke. If it acts as a good trampoline here for this pair, then yes, I will go to the upside again. For me, for the downside, I need to see a drop below the downside line, below the 1.3695 territory, and then we could just take it from there. USDCHF as well, very interesting here activity, because yesterday I talked about the 0.9222 territory. We got the break, but we didn't see the body of the daily candle staying above it. So long story short, I need to see another push above this area in order to go higher. At the moment, I'm not getting that. So in a way, the downside scenario is again becoming an attractive one. But again, the downside scenario only as part of the correction to the downside, because don't forget that we're still above this upside line drawn from the low of the 27th of July. So any move all the way towards that line could be classed as a temporary correction before another possible leg of buying. So yeah, for now, I'm keeping an eye on the 0.91 kind of 47 zone, something like that. If we do fall and stay below, then yes, I will go nicely towards the 200-day EMA. GBPUSD. So beautiful recovery, beautiful drift back above this hurdle, this 1.2110. But to be honest, as I said to you, I need to see a push back of the 1.2182 zone in order to consider a move to the upside. If I get that, great, I will go for a larger correction. Simple as that. I'm not going to spend too much time on this one because I already talked about it yesterday. So if we do climb back above the 1.2182 and then the 1.22 territory, then yes, I'll go for a move towards this downside line. For the downside, well, a drop back below the 1.2110 territory could spark that interest among the bears, but I think that yes, then we'll have a problem with the other support levels. This recent one that we've created the low for October, 1.2037, 1.2037, yeah, roughly around here. If we clear that, then yes, this will confirm a forthcoming lower low, and then we could go lower. But at this point, we're seeing some recovery. Like I said, if we do climb back with the 1.2182, then yes, I will go a little bit more to the upside towards this downside line. At least I will aim for that. EUROSD. So beautiful recovery, or sorry, retracement back down. So beautiful rejection from this from the upper side of the falling channel. And then what I said to you yesterday, if we do fall back below the 100-day EMA and stay below it, then yes, I will lean towards the downside. So far, we did drift, but we're very close to that 100-day EMA. So let's see if we can stay below it. If we cannot, maybe the upside scenario is not off the table. However, as I said to you before, my upside scenario will come on a break of this upper side of the falling channel and a push above the 1.6650 territory right here. If we climb above that, then yes, great, more buyers could join in because a forthcoming higher high will be confirmed. And finally, EURUSD, guys. So yes, beautiful move here. Look, I've talked about this 1.0443 territory. I said to you that in order for me to go lower, a drop below this territory is required. Did we get that? No. So we can also consider the upside scenario, at least in the short run, like a correction towards this this downside line. And the fact that we climbed back above the 1.0483 and stayed above it. So I'll say this way, even if we do retrace here at some point, as long as we remain above the 1.0483, then yes, I will continue aiming to the upside in the near term only. And then we'll take it from there, guys. So, yeah, but that's at the moment, that's the game plan. Look, I would really strongly recommend to keep your eyes on the economic calendar today. There is not much happening, of course. I understand the main focus is tomorrow, but maybe a few shifts could happen here and there. Another thing, of course, is also that maybe the market will remain a little bit on the quiet side, maybe just kind of, waiting for the numbers coming out tomorrow, and then, maybe then the action will start. But again, let's not rush into things. Let's keep an eye on this. Let's be cautious, be careful. As always, guys, as I keep on saying, have your stop losses in place, risk only what you can afford to lose. Don't overtrade, and everything will be fine. So, and on that note, thank you very much, and I'll see you tomorrow at 6 o'clock GMT time for my Daily Picture International with Easy Markets, and I hope you have a fantastic trading day today, guys. See you tomorrow. Bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.